Hi friends, welcome back. Today we will discuss about transitional provision of GST. So first of all, what is transitional provision? These are the procedures that will help in moving from current tax regime to GST and provide clarification for smooth functioning during transition period. As people want to know how to move to GST, what will be the complications? There are lot of uncertainties and they have lot of questions regarding input tax credit, whether they can avail the balance of input tax credit, Cenvat credit under the current law to GST, proceedings going under current laws, job of government officials, tax implications on goods sold in current tax laws and written in period of GST. Here we will discuss many issues like this in detail. So I think it's better time to start. Migration of government employees. As per the model GST law, all the employees who are appointed for the current tax laws which are going to be subsumed under GST, and if they continue their office on appointed day, they shall be deemed to be appointed under GST Act as well. Here we use the terminology appointed day. This terminology will use so many times under the transitional provisions, so it's better to clear its meaning. Appointed day means the date on which section 1 of this act come into effect, and the section 1 says it shall come into effect on such date as the central or the state government may by notification in the official gazette appoint in this behalf. So appointed date would be the date on which central or the state government shall notify in the official gazette. Migration of the taxpayer. It is very important that how the taxpayer from the current tax regime, from the current tax laws will move to the GST. They are registered under the VAT, service tax, excise and customs and many other indirect taxes. But they want to have single registration under the GST, and how this will happen, because it is proposed that GST will be applicable from 1st of April 2017 if they are registered up to 31st of March 2017 under these laws, and how they can be registered under GST on the 1st April 2017. So there is a provision under the GST model GST law that person registered under earlier laws on appointed day. I hope you guys are clear about the appointed day. So each and every registered person who is registered on the appointed day under earlier laws which are going to be subsumed under GST, to whom certificate of registration shall be granted on provisional basis for a period of 6 months. This period of 6 months can be extended by central government or the state government on the recommendation of the GST Council. And this certificate of registration, provisional certificate of registration, would be valid for 6 months, and during these 6 months prescribed information would be required to be furnished to the department. If these information are not furnished, then the provisional registration shall be cancelled, and after furnishing these information, center of the state government shall grant registration on the final basis. Carried forward of Cenvat credit or the VAT credit in return. If you have carry forward balance of Cenvat credit or the VAT credit in the return under the current laws, then that balance can be carried forward to GST law as well, and its credit you can take under the GST. The provision of the Cenvat credit are given in Central Goods and Service Tax law, and the provisions of the VAT credit are given in State Goods and Service Tax law. A registered taxable person shall be entitled to take credit in his electronic credit ledger. What is electronic credit ledger? It's the online portal on which each and every registered person have the balance of input tax credit. Input it's a basically it's a input tax credit ledger which is maintained online by the department for each and every registered taxable person. Amount of credit should be carried forward as per the return filed under the earlier law for a period ending the day immediately preceding the appointed day. I hope the GST law would be applicable from 1st April 2017, and if it applicable from the 1st of April 2017, then we have to take the carry forward balance for the period ending 31st of March 2017. So amount of the Cenvat credit or the VAT credit which is carry forward as per that period return, that would be treated as input tax credit under the GST. Amount should be admissible as credit under the earlier laws as well as this act. This is the major condition to be fulfilled for carry forward of these credits. This credit should be available under the earlier laws under VAT, Cenvat credit rules, and it should be available under GST as well. If a credit of item X is available under the current VAT or the service tax or the excise provisions, but it's not available under the GST, then we are not able to carry forward the balance or vice versa. Like we can say that earlier few of the items like renting of the vehicle, renting of the motor vehicle. If the if an assessee has a motor vehicle and he used to take it for the providing the output service of renting of the motor vehicle, he is eligible to take the input credit. But under the GST, this is not admissible. So he would not be able to take the credit under the GST. So basically, he would not be able to carry forward this amount if it's in the return and it is showing as carry forward of the balance. So he would not be able to take under the GST because it's the main condition that he should be able to claim credit under the earlier laws as well as under the GST. Unavailable Cenvat credit or input tax credit on capital goods not carry forward in the return. Earlier we read about inputs as well as the capital goods. Every credit we have covered if it is carry forward as per the return. But now unavailed Cenvat credit or the input tax credit, Cenvat credit as per the Cenvat credit rules and the input tax credit for the VAT on the capital goods not carried forward in a return. This amount has not been given in a return. So a registered taxable person shall be entitled to take credit in his electronic credit ledger. Amount of the credit is not carried forward as per the return file under the earlier law for the period ending the day immediately preceding the appointed day. This amount was not mentioned in the return, and now this would be able to take the credit under the GST. But this is applicable only for the capital goods, not for the inputs. Amount should be admissible as credit under the earlier law as well as this act. This is the same condition that the credit of this capital good should be available under the previous laws as well as GST. So if you will think that under excise you can take capital goods, you can avail the capital goods credit 50% in a year and the 50% in the next year. So you're not able to avail that 50% part of the credit in the first year. And if you assume your first year was the year ended 31st March 2016, and you was not able to take the remaining 50% credit, then you can take its credit under the GST, whether or not the balance is coming from the return or not, because you was not able to take the credit under the return as per the previous laws. Even if you have by mistaken not avail the credit under the earlier law for the capital goods, then also you can take the credit, because law is silent about this, whether because of what reason you was not able to take the credit. But if there is an inputs and you have not taken the credit under the earlier law, then you would not be able to take the credit, except you can revise the return. Amount shall be recovered as an arrear of the tax if the said amount is found to be recoverable as a result of any proceeding instituted, whether before or after the appointed day, against such person under the earlier laws. If any proceedings has been instituted, whether before or after the appointed date, irrespective of the time when the proceeding was instituted, but it belongs to the period, the earlier period, then it shall be recovered as arrear of the tax. Credit of eligible duties and taxes in respect of inputs held in the stock. Registered taxable person who was not liable to register under the earlier law, or who was engaged in manufacture or sale of exempted goods under the earlier law but now liable to tax under this act. So basically there are so many person who was not required to take registration under the earlier laws, but now in GST they have to take the registration. And because they have to take the registration, whether the goods, whether the inputs which are in the stock, on which earlier they were not able to take the input tax credit or the Cenvat credit, because they are not required to take the registration, or they were required to take the registration but they were dealing in the exempted goods, that's why they are not able to take the credit. But now under the GST they have to pay tax, goods are not exempted, or now they have to take the registration. I want to just give you an example. Earlier under the excise there was threshold limit of 1.5 crore for taking the registration, but under the GST, as per the GST model law, the threshold is rupees 10 lakh only, and 5 lakh rupees for the northeastern state including Sikkim. So now they are required to take the registration. If earlier their turnover was 60 lakh rupees, they are not supposed to take the registration, but now they have to take the registration. So, and as they have to take the registration, they are liable to pay the tax under the GST. Now the question arises whether the inputs which are available in the stock on the appointed day, whether they are available to take its credit or not, because they are going to pay tax on these goods in the upcoming period. So they are entitled to take the credit of the eligible duties and the taxes and VAT in respect of inputs held in the stock and inputs contained in semi-finished or the finished goods held in stock on appointed day. First of all, there is credit entitlement of the credit only for the inputs which are exactly have in the stock, or the inputs contain the semi-finished goods or the finished goods held in the stock. There is no credit for the capital goods or the input services. They are eligible to take credit of the eligible duties and the taxes. Eligible duties and the taxes are covered under the Central Goods and Service Tax Law, and the VAT, credit of the VAT is available under the State Goods and Service Tax Law. Such inputs or the goods are intended to be used for making taxable supplies under this act. If they are used for the exempted supply, then there is no need to take the credit, or the credit would not be available. He was eligible for credit on such inputs and or the goods under the earlier law, but for his not being liable for registration or the goods remaining exempt under the said law. This one is a condition that they were entitled to take the credit under the earlier law also, but they were not taking the credit because they were not liable to registration, or their goods or their goods were exempt under the earlier laws. If they were required to take the registration or the goods were not exempt, then definitely if they were eligible to take the credit, then only they are allowed to take the credit under the GST. He is eligible for input tax credit under this act. Input tax credit should also be available under this act. In crux, you can say they are eligible to take the credit on these goods only and only if they were entitled to take the credit under the earlier law as well as under the GST. If any of the condition is not satisfying, then they are not entitled to take any credit. Another condition, he is in the possession of the invoice and or other prescribed documents evidencing payment of the duty or the tax under the earlier law. The registered taxable person should have possession of invoice or any other documents which can show that he has paid the amount of the duty or the tax. But these documents should not be older than 12 months from the appointed date. If suppose appointed day is 1st of April 2017, then the date of the invoice or date of such document cannot be older than 12 months from the 1st April 2017. If it's older than 12 months, then he would not be able to take the credit. Amount of credit shall be calculated as per generally accepted accounting principle in the prescribed manner. These principles would be prescribed. Note, amount shall be recovered as an arrear of the tax if the said amount is found to be recovered as a result of any proceeding instituted whether before or after the appointed day against such person under the earlier law. This is the same provision as we read earlier. Now, person switching from composition scheme. What would be the case? What would be the situation if a person was earlier in the composition scheme and now he is not in the composition scheme? Under GST section 8 talks about the composition scheme where a person having the aggregate turnover of up to rupees 50 lakh, then he have to pay taxes minimum at the rate of 1%. So if any person who was earlier in the composition scheme, for them this provision are covered under model GST law. It says entitled to take the credit of eligible duties and the taxes and VAT in respect of inputs held in the stock and inputs contained in semi-finished or the finished goods held in the stock on the appointed day. This condition is same as we read earlier. Such inputs or the goods are used or intended to be used for making taxable supplies under this act. These inputs or the goods should be intended or should be used for making the taxable supplies only. It should not be for the exempt supply. I want to make you clear that if we export the goods, then it would not cover under the exempt supply. It's covered under the zero rated tax supply. So if your intention is to export the goods, then in that case you can avail the credit. Although government is not going to collect any tax, but it's not the exempt. And you are only able to take the credit on the inputs, same, not for the capital goods and the input services. The said person is not paying tax under the section 8. As I told you, section 8 is for the composition scheme. He should not pay the tax under section 8 and under the GST. If he is doing so, then there is no question arise for the taking the input tax credit. He was eligible for credit on such inputs and or the goods under earlier law, but for his being a composition taxpayer under the said law, it says that he was eligible to take the credit under the earlier law, but he was not taking because of the condition that he was the composition taxpayer. If suppose he was not the composition taxpayer, he was the regular taxpayer, then credit on these inputs were admissible. Then only you can take the credit under the GST. If input credit on these goods, the Cenvat credit or the VAT credit on these goods were not eligible under the earlier laws as well, whether you are the composition taxpayer or the normal taxpayer. If it's not admissible under the earlier tax laws, then it would not be admissible under GST as well. Another condition, he is liable for input tax credit under this act. Sorry, he is eligible for input tax credit under this act. So he should be, as per GST also, he should be eligible to take the credit. So the in crux you can say that he should be eligible to take credit under the earlier laws as well as under GST. He is in possession of the invoice and or the other prescribed documents evidencing payment of the duty tax under the earlier laws not older than 12 months from the appointed day. It's the same condition. Again, amount of credit shall be calculated as per the generally accepted accounting principle which are required to be prescribed. This one is again the same condition. Now the amount shall be recovered as we read. Amount shall be recovered as an arrear of the tax if the said amount is found to be recoverable as a result of any proceeding instituted whether before or after the appointed day against such person under the earlier law. These are the same conditions which they are following in each and every section in the provisions. Now, person switching over to composition scheme. Now the question arises: if a person who was not under the composition scheme under the earlier laws but now he want to cover himself under the composition scheme, then taxable person who has carried forward the amount of eligible credit or the VAT credit. Eligible credit is covered under the central goods and service tax and the VAT credit is covered under state goods and service tax. So amount of this credit would be available as CGST and VAT credits would be available as SGST in a return. So the taxable person who has carried for the amount of eligible credit or the VAT credit in a return furnished under the earlier law in respect of the period ending the day immediately preceding the appointed day switches over to composition scheme under section 8 of this act. So basically what it says that he was eligible to take the credit under the earlier law and he furnished the return avail the credit in respect of the period ending the day immediately preceding the appointed day and now he want to switch over to the composition scheme, then he shall pay an amount equivalent to the credit of the input tax in respect of inputs held in stock and inputs containing semi-finished finished goods held in stock on the day immediately preceding the day of such switchover by debit in the electronic credit ledger or debit in the electronic cash ledger. So basically what it says that if you are switching to the composition scheme, then you have to pay the amount of tax of the input of the eligible credits or the input tax in respect of the inputs you directly held in the stock or which are part of any semi-finished goods or the finished goods which are held in your stock immediately preceding the appointed day. Then this amount of the tax, this amount of input tax that is that you have availed for these goods you have to pay because now you are moving to the composition scheme. When earlier we were talking about composition scheme to the normal scheme, then we are giving the input tax credit. But now you are earlier you were in the normal scheme and now you come to under the composition scheme. No tax would be levied. Only the under the at the rate of 1% you have to pay the tax and you are not entitled to take the credit any further and you have to pay the amount of credit for the goods which are available in your stock and there are two options to pay the credit. First, you have to pay through the electronic credit ledger or if any amount remains then you have to pay by electronic cash ledger. As I discussed you what is the electronic credit ledger, in the same manner there is the electronic cash ledger. It's the cash ledger maintained by the department. You have to pay that you have to pay the tax that you have to pay the amount that would be fall under the electronic cash ledger and further if you want to pay the tax interest or any fine or any penalty you can pay through the electronic cash ledger. It's again an online portal where all these transactions would be recorded. So basically electronic utilization of electronic credit ledger is only for the payment of taxes but the you can avail the benefit of electronic cash ledger. You can utilize for payment of taxes, interest, penalty, fines, and basically here you have to pay the amount of credit through the electronic credit ledger, because earlier you have only availed the credit, and that's showing under the electronic credit ledger, so you can just reverse it. And if you have utilized it, that means if you have utilized in payment of the tax, then you have to pay through the cash ledger. I hope you are understanding. Otherwise we can take an example. If the amount of input tax under amount of input tax on the inputs which are available in the stock on the day before the appointed day is rupees 1000, so you have to pay this 1000 rupees. Now the question arises, how you have to pay? There are two modes of payment. First, you have to pay through the electronic credit ledger if there is any balance. Suppose you have 800 rupees under the electronic credit ledger, you can just reverse through the electronic credit ledger. So out of 1000 you have paid through the electronic credit ledger, and the remaining 200 you have to pay through the electronic cash ledger. But suppose there is balance of 1200 under electronic credit ledger, then what would be the situation? You have to pay 1000 rupees through the electronic credit ledger, and the balance 1000 rupees that is already in the electronic credit ledger, that will be lapse. No benefit of it. That's it. Exempted goods return to the place of business on or after appointed day, and now they are taxable under the GST. Goods on which duty has been exempted under the earlier law at the time of removal or the sale. Time of removal is given for the goods which are removed under the excise, because the time of removal is the taxable point under the excise, and the time of sale is taxable point under the VAT. So basically what the provisions say, that if any goods which were initially sold under the earlier laws within the 6 months from the appointed day, and at that moment these goods were exempt, and if these goods are going to be returned back within the 6 month from the appointed day, then what would be the case? If these are going to be returned within the 6 months from the appointed date, and these are identifiable to the satisfaction of the proper officer, that if the proper officer want to satisfy that whether these are the same goods or the not that were initially sold, then and if he is able to satisfy, then there is no need to pay tax. Otherwise the person returning the goods is liable to be taxed. If both the conditions are satisfied, then we will check whether the both the conditions are satisfied or not. If answer comes no, if say that Mr. X sold goods to Mr. Y within 6 months from the appointed day, but he was not able to return within the 6 month from the appointed day, then both the conditions are not satisfied, and the Mr. Y have to pay the tax on the goods which he has returned. If both the conditions are satisfied, then no tax shall be payable. All these procedures would be checked out only if the goods now become the taxable under the GST. If these are not taxable under the GST, then no condition need to be checked, no taxable event, no taxation would be there. But earlier if these were the exempted goods and now it become the taxable, then we have to see the provision that whether the goods has been sold before appointed date within the 6 months, or these are returned back within the 6 months from the appointed day. And if both the conditions are satisfied, then no tax would be levied. And if any of the condition is not satisfied, then the person who is returning the goods have to pay the tax. Duty paid goods return to the place of business on or after the appointed day. Under the earlier case, we saw that the initially goods were exempted, and after and when the goods were returned, they were taxable. But now in this case, the goods were taxable at the time of sale. So these are the duty paid goods and now they are going to be returned. So as per the provision, goods on which duty or tax has been paid under the earlier law at the time of removal or the sale. Removal is for the excisable goods and the sale is for the goods on which VAT has been charged. And if the goods has been sold within the 6 months before the appointed day, and now the goods are returned within the 6 months from the appointed day and the identifiable to the satisfaction of the proper officer. If both the conditions are satisfied, we will check if we arrived at the conclusion yes, both the conditions are satisfied, then no tax shall be payable, and if any of the condition is not satisfied, then tax shall be payable by the person returning the goods. But in this case, when both the conditions are satisfied, no tax shall be payable, but what would be happen with the initial seller who basically sold the goods, because he has already paid the taxes on that goods, and now if purchaser want to give it back to the seller, he want to return the goods, then who will bear the tax? The initial seller have to return all the money because he has received the goods, but he has already paid the tax to the government. So the law says if you have already paid the tax, then you are eligible to book the credit if goods are received. Issue of supplementary invoices, debit or the credit notes where price is revised in pursuance of a contract. The price can be revised on the upper side or on the lower side. If initially the price was decided at rupees 100, now it can be 110 or rupees 90 as well. So basically these provisions are applicable only if the price is revised as per the contract. There should be pre-existing conditions. This contract should be entered before GST came into place. So, and the GST law provides for issue of the supplementary invoice, further invoices or the debit notes or the credit notes for these revision in the prices. So there are few common provision for both the upward and the downward revision of the price, and there is an specific provision for the downward revision. So first of all, we will cover the common provision which are applicable to both. Contract entered prior to the appointed day. As we discussed earlier, there should be a contract pursuant to which the price should be revised, and this contract should be entered before the appointed day. Price of the goods or the service revised on or after the appointed day. It's obvious. That's why we are discussing these provisions, because the earlier the goods were sold, the contract was entered earlier, and now under the GST it's going to be upward or the downward revision. So the price is going to be revised after the appointed day. Person who removed, sold or provided goods or the services. The word removed is used for the excisable goods. The word sold is used for the VAT label goods, and the provided is used for the services, because the excise duty is chargeable on the removal of the goods from the factory. VAT is chargeable on the sale of the goods, and the service tax is charged on the provision of the services. So the person who removed, sold or provided goods or the service may issue supplementary invoice or the debit note or the credit note within the 30 day of the revision. It's the mandatory condition that these documents should be issued within the 30 day from the revision. Basically, supplementary invoice can be issued in both the cases, whether it's the downward revision or the upward revision, but the debit note is going to be issued only in case of upward revision, and the credit note is to be issued in case of the downward revision. Supplementary invoice or the debit note, the credit note shall be deemed to have been reissued in respect of an outward supply made under this act. It shall be deemed that these supplementary invoices, this debit note and the credit note, it shall be deemed as these are in respect of outward supply under this act. This act means GST. And there are few conditions that you have to give few information. There are prescribed format, not the prescribed format, prescribed information that you have to mention under the supplementary invoice, debit note and the credit note. Now come to the specific provision for the downward revision. It's applicable only in case of downward revision of the price. Taxable person shall be allowed to reduce his tax liability on account of issue of the said invoice or credit note only if recipient of the invoice or the credit note has reduced his input tax credit corresponding to such reduction of tax liability. Now it says, if Mr. X initially sold the goods for rupees 100 and now he want to revise the contract, he want to revise the price at rupees 90, there is downward revision of the price, then he will issue either the supplementary invoice or the credit note. If he issuing credit note or the supplementary invoice, what does it mean? His liability is going to be reduced on rupees this 10, 100 minus 90. So the provision says his tax liability would be reduced only and only if the another person to whom he sold the goods has reduced his input tax credit corresponding to such reduction in the tax liability. If he is not reducing input tax credit, then he will not be able to reduce his tax liability. That means it's the burden on the seller that he will insist the buyer that please reduce your input tax credit, then only I can reduce my liability. So department is in the benefit. There is no confusion to the department, no headache to the department. Only the buyer and the seller have to communicate themselves that buyer seller will say, yeah, I have revised the price. Now the price is revised downward and I have to reduce my liability. Please reduce your input tax credit as well that you have booked at the time of initial invoice. Now the pending refund claims under the earlier law. These provisions, if your refund claim which you have lost in the earlier law, then what would happen if the GST came into play? The refund of any duty or the tax and interest, there can be a refund for any of this duty, any tax or any interest, and the claim filed by any person before the appointed date. That means the earlier laws which are going to be subsumed under GST. These will be disposed of in accordance with provisions of the earlier law. Although the GST will come into the play, but these proceedings will be handled as per the provisions of earlier law only. And if eventually amount decided as accruing to him, that means the refund is sanctioned as per these proceedings, then we will say whether the amount belongs to the central laws or the state laws. The amount of the refund, whether it pertains to duty, tax or the interest, whether that amount pertains to central laws or the state laws. If we will see that it belongs to the central law, then GST model law says that this amount would be paid only in the cash, notwithstanding whatever is written in that laws, except if this refund is belonging to section 11b subsection 2 of Central Excise Act 1944. What the section 11b subsection 2 says of Central Excise Act, it says that the amount would be refunded, amount will be given to the fund. What does it mean by the fund? Fund means investor education, the protection fund. it would be given to that fund other, and it can be paid to the assessee as well, registered person as well, if some conditions are satisfied. If the refund pertains to that section, then that section will prevail. Otherwise, in all the laws which are pertaining to the central, which are covered under the central laws, refund shall be made under cash only, irrespective whatever was written under those laws. But if refund belongs to the state laws, then amount shall be refunded in accordance with provision of that laws only. Whatever the provision was written in the state laws, the amount would be refunded in that manner only. Now, the claim of Cenvat credit or input tax credit to be disposed of under the earlier law. Now, the claim is for the Cenvat credit as per the Cenvat credit rules, which can be under the Excise Act or the Service Tax, and the input tax credit pertains to VAT. The proceeding of the appeal, revision, review relating to the credit under the previous laws. It either it can be the claim or the recovery claim. These proceeding of the claim would be filed by the assessee or the taxable person or the registered person. In the proceeding of the recovery is taken by the department. So if there is any proceeding of the appeal, review, revision relating to credit can be the Cenvat credit or the input tax credit. Cenvat credit provisions are going to the central goods and service tax law, and the input tax credit provisions are going to the state goods and service tax laws. And it shall be disposed in accordance with the provisions of the earlier law. As same as earlier, these would also be disposed of, these proceedings would be disposed of according to the provisions of the earlier law only. And now we come to the decision. If the decision is that the amount is admissible to the claimant, the amount is admissible, yeah, it's in the favor of registered person, the taxable person, then we will see that the amount is pertains to central laws or the state laws. If the amount pertains to central laws, then the amount shall be paid in cash except belonging to section 11b2 of the Central Excise Act 1944, this same as earlier. And if the amount belongs to the state laws, then the amount shall be refunded in accordance with the provision of the that law only. This one also we have discussed in earlier slide. Now we will see if the decision is recoverable from the CC, that the amount you have department will recover from the CC, and the amount belongs to the Cenvat credit or the input tax credit. This can be happen only in the case when the ACC, when the when this person has excessively availed the Cenvat credit, has excessively utilized the Cenvat credit or the input tax credit, and now the proceeding says that there is required to recover the amount. Now, whether it's a central law or the state law, any of the law, like whether it's a Cenvat credit or the input tax credit, amount shall be recovered as an arrear of the tax under this act. The amount would be required to be recovered, and this would be treated as arrears of the tax under the GST. There is a common note that the amount in all the above cases shall not be allowed as input tax credit. That whether the amount was admissible to the claimant or the recoverable from the assessee in any of the cases. Now, it's not going to be allowed as input tax credit, because if the amount was admissible to the claimant, the government has refunded the same. There is no question arise whether the now he can avail the input tax credit or the not, because the government has already paid that amount in cash or by whatever the manner. In the amount is recovered from the assessee, then also he cannot avail the credit or the input tax credit. Finalization of the proceedings relating to output duty or tax liability. Now, these are the finalization of the proceedings. relating to the output duty or the tax liability. Proceedings of the appeal, review, revision relating to the output duty or the tax liability initiated before the appointed day. These are the proceedings related to the output liability. Earlier we read about the input tax credit or the Cenvat credit, and now these are the output duty and the tax liability. And if these proceedings are initiated before the appointed day, then it shall be disposed of in accordance with the provision of earlier law only. And if the decision is the amount is admissible to the claimant, then if amount is belong to the central laws, then the amount shall be paid in cash except belonging to section 11b2 of the Central Excise Act. And if the amount belongs to state laws, then the amount shall be refunded in accordance with the provision of that law. If recoverable from the CC, then the central or the state laws, any law, then the amount shall be recoverable as an arrear of the tax under this act. Amount in all above cases shall not be allowed as input tax credit. This was whole similar to the input credit or the input tax credit or the standard credit provisions. So both are almost same. Only the topic was different, that was belongs to the credits, and this provision is for the output duty. Now, the amount recovered or refunded in pursuance of assessment or adjudication proceedings. As, as per the provisions, it says that in pursuant to the assessment or adjudication proceedings instituted whether before or after the appointed day under the earlier law. This provision is little bit different. It says about that the proceedings are instituted before or after the appointed day. In the earlier topics, we saw about when we will see that the proceeding were initiated before the appointed day, but this provision is saying that the amount that the proceeding can be initiated whether before or after the appointed day. So this is the difference. The proceeding can be initiated if the appointed day is 1st of April, then the proceeding can be initiated on the 31st of March as well as 2nd of April. But under the earlier provisions, the proceeding should be instituted only before the appointed day. The decision of the tax, interest, fine and the penalty, if it's refundable to the CC, then the same provision under the central law, the amount will be paid in the cash except to the section 11b 2 11b subsection 2 of the Central Excise in 1944, and if it belongs to a state law, then the amount shall be refunded in accordance with the provision of that law. And if the amount is recoverable from the CC, whether it's a central law or the state law, amount shall be recovered as the arrear of the tax under this act. And one another change here, the amount recovered shall not be allowed as input tax credit under this act. When earlier we saw the provision for the refund of the input tax credit, the proceedings of the output liability, we saw that the provision says provision says the amount of input tax credit shall not be allowed whether it's a case of refund or it's the case of recoverable from the CC. But under this provision, the provision says that the amount recovered shall not be allowed as input tax credit under this act. The amount recovered, this is applicable only in case of recovery from the CC. If the department is going to recover any amount from the CC, then CC would not be able to take the input tax credit. Amount recovered or refunded pursuant to revision of the return. If return furnished under the earlier law and now it's revised during the tenure of GST, what would be the effect? If due to the revision of the return amount get refundable to the CC, then if the amount belongs to the central laws, the same provisions would be there, like amount would be paid in the cash except to the section 11b subsection 2 of the Central Excise Act. And if the amount belongs to state law, then the amount shall be refunded in accordance with the provision of that law. If the amount is recoverable from the CC, because in the revised return the tax liability is increased, then the amount shall be recovered as a arrear of the tax. Under this act, amount shall be recovered from the taxable person. And the note again, it has been said the amount recovered shall be allowed as input tax credit under this act. That the amount that has been recovered, this provision has been given only for the recovery from the CC, not for the refundable of the CC. So again, if the amount has been recovered due to the revision of the return, then that amount would not be eligible to take the credit. There are few more points on transitional provisions. Goods and or services supplied on or after the appointed day in pursuance of a contract entered into prior to appointed day shall be liable to tax under the provisions of this act. If someone supplying the goods or the services after the appointed day, because of the contract he has already signed before the appointed day, then also the GST would be levied on these supply as per the current act, not as per the previous laws, irrespective of the fact that the contract was entered at the time of previous laws, what were the terms of the contract. Irrespective of those all the facts, the tax would be levied as per the GST Act. Next one, progressive or the periodic supply, that is payment before the supply of the goods or the services, and retention payments. In both the cases, no tax shall be payable if duty or the tax payable on such supply has already been paid under the earlier law. In the first case, if payment is already made before the appointed day and the supply is made on or after the appointed day, then and the amount of tax is already paid under the earlier laws, then there is no need to pay duty and the tax under the current law. And the second one, retention payment. If supply of goods and the service is made under the earlier laws, that is supply has been taken place before the appointed day, but the part of the consideration is received on or after the appointed day, and tax has already been paid under the earlier laws, then there is no need to pay tax again under the GST, irrespective of the point of supply. In crux, we can say whether the service has been received before the appointed day and the payment is received on or after appointed day. In the second case, payment has been received before appointed day and the service is received on or after the appointed day, but the if the amount of tax is already has been paid under the earlier laws, then there is no requirement to pay tax under the GST. Now the input tax credit on account of any services received prior to appointed day by an input service distributor shall be eligible for distribution as credit under this act, even if invoice relating to such services is received on or after appointed day. We know that the input service distributor can only distribute the credit of input services, and if any of the services he has received before the appointed day, then he can distribute its credit irrespective of the fact that the invoice relating to this service has been received before or after the appointed day. Now comes to the last point. Sale of goods take place and invoice is also issued before the appointed day, on which tax was required to be deducted under the earlier laws. There is no need to deduct tax under the section 37 of this act where payment made on or after. appointed date. If there are any TDS provisions on supply of the goods, on the sale of the goods under the earlier laws, and sale has been taken place before the appointed day, invoice is also issued before the appointed date, then there is no need to deduct tax again under the GST under provisions of section 37 of the GST, irrespective of the fact whether the payment is made on or after the appointed day. Okay guys, now you got the fair idea about transitional provision of GST. Hope this would be helpful. If you have any doubt or query, just leave your comment below the video. So now it's time to say thank you. See you in next video. Please subscribe, like and share my channel.